Good morning, everyone, and welcome to the webinar, Ensuring Profitable Growth for Brazil's Recovery and What to Expect for 2021. My name is Marco Prasso, and I'm a Client Relationship Manager at Frontier View, supporting clients in the consumer good, B2B, technology, and healthcare industry. We're coming to you today from Washington, D.C., and we're excited to bring you one of our final LATAM webinars of 2020. Before we jump in, I realize that some of you may be potentially new to Frontier View, so I thought I would take 2 minutes to provide you with a quick overview of our firm and how we work with executives at major multinationals. At a very brief glance, Frontier View provides the world's best market intelligence and advisory services for global business professionals and leading multinationals across industries. We help our clients grow and win in the most important markets by informing and empowering the market monitoring, planning, execution, and other critical decision processes of our clients. With continuous research and insights, custom solutions, and transaction support services, we provide our clients with timely, actionable insights to adapt and win in changing markets. Our company is headquartered in Washington, D.C., with offices in London and Singapore and New York. For more information, please visit www.frontierview.com, and you can find all your information there. We also have a new mobile app which can be downloaded for free if you would like to have access to similar business insights for Brazil and any other market globally. And finally, we do like to engage our audience throughout the webinars, so we will be using the built-in GoToWebinar polling software throughout this webinar, and we highly encourage you to participate. So with that very brief overview, it is now my pleasure to introduce our presenter, Ramiro Sugrañez. Ramiro is one of our senior analysts for Latin America research and has driven the research behind Brazil's 2021 outlook for today's presentation.
Thank you for that introduction, Marco. It's a pleasure to join you all this morning and share our latest insights for Brazil that we have here on Frontier View. We hope that these will be insightful as you continue to plan and prepare for the environment in 2021. A little bit about me. I've been with the firm for about 2.5 years, covering many different regions, and I've led the latest research that we'll be sharing with you all today on Brazil, on the macroeconomic, political environment, what to expect in the business landscape as well.
Perfect. Thank you, Ramiro. And so with that introduction, I think we can go ahead and get started. To briefly touch up on the structure, our session today will consist of a 50-minute moderated discussion followed by a 10-minute Q&A. And so as I mentioned earlier, please feel free to send any questions or points of clarification on any of the topics that we cover today through the Q&A box on the right-hand side of your screen, and we will do our best to ensure that they are addressed during the last 10 minutes. So with that, Ramiro, thank you so much for joining us today. As we all know, there is definitely a lot happening in Brazil right now, a lot of uncertainty and moving pieces for the 2021 expectations. I'm really looking forward to this session, and I'm sure these insights will provide valuable clarity to our viewers and clients as they plan for the year ahead. So I was wondering if you could help us get started and share a little bit more about the agenda for today.
Sure, Marco. Thank you. So what we have planned for today is essentially digging deep into that outlook for 2021 and what we expect across many different key areas. And as you mentioned, there's still a lot of uncertainty, moving pieces for next year as to what to escape and how things could evolve. So we're going to start off by first going over the COVID-19 situation briefly and economic reopening, how we see that evolving and recent risks, especially with cases rising again in Brazil. And then going deeper into the customer demand environment, what to expect there across different industries, geographies, the competitive landscape in Brazil, key pressures that we see building already this year and into 2021, and then changes as well in the operating and policy environment that businesses should be paying attention to, because it could be quite important for the environment as well next year. But before we begin, as Marco mentioned, we do like to engage our audience throughout and have polling. So I would like to launch a polling question here, and that way you can also benchmark yourself against your peers as to how you're thinking about a lot of the themes that we'll be talking about today. So you can see here the first question we'll be starting off with is, how has COVID-19 impacted your business relative to your own expectations when the pandemic began in Brazil? There's a few options there: much better than expected, better than expected, as expected, or worse or much worse, the last two at the bottom. Also, we have been asking this question, for a little bit now in Brazil and across different markets. And for Brazil especially, I think we've seen a little bit more optimism build with the recovery materializing a lot quicker than many expected. So I'm curious to see what this group will answer here and whether that aligns with what we've recently seen. We'll give it just a few more moments to make sure that you're all set up on the polling software and that you're able to answer. Great. So I think as expected there, most are either in the better than expected group or much better than expected. And I think this has a lot to do with coming off that period of repressed demand that we had during the more strict restrictions in Brazil, with all of that fiscal stimulus being implemented that we'll talk about throughout the presentation, leading to a much quicker recovery than I think many businesses were even prepared for in Q3 and Q4 of this year. But we'll talk about how sustainable that is moving forward, and that'll be a key point that we'll focus the conversation on. Well, great. So to kick us off here, what we can see in this first slide, talking about the COVID-19 situation, is essentially the amount of cumulative fatalities that we've had from COVID-19 across the region, controlled by the population size, right? So clearly, as you all know, Brazil is one of the most hard-hit countries from the health standpoint, or from the economic standpoint. We've actually seen Brazil do a lot better, but we're still very much in this COVID battle, right? And as I mentioned earlier, cases are once again starting to rise in Brazil, as you can see here, which is a worrying trend, especially if we're thinking of potentially restrictions being re-implemented throughout different states in Brazil and at the local level. And what we would maintain is that the key factor to continue to monitor across states in Brazil is the healthcare and ICU capacity across different cities and states, and that's what I'm showing here. And I would say it's unlikely that we go back to the same level of more strict restrictions that we had, for instance, in Q2 of this year, when you had a lot of governments implementing strict social distancing measures, regardless of kind of that ICU capacity, trying to prevent the spread of COVID-19. Now, we do have a little bit better healthcare capacity. We have gotten a little bit better at treating COVID-19 and trying to reduce those fatalities as well. So we're seeing the risk tolerance of local officials be a little bit higher. But that being said, once you do start to get those pressures build in the healthcare system to more severe levels, governments will likely respond across different areas. And we're seeing that already materialize in Brazil. For instance, in Sao Paulo last week, many of the regions that were in the green phase of reopening have now moved back to the yellow phase. But we don't think we're going to get to the same level of strictness of social distancing measures, as I mentioned. And also, it depends how effective they are too, right? And we know that in order for these to be effective, you have to finance them. We saw that earlier this year with Brazil spending a lot to support the liquidity of companies and businesses, and that's a very expensive thing to do as well. And they're no longer in the same position that they were earlier this year to be able to, let's say, efficiently promote the same level of restrictiveness that we saw before. So that being said, that is kind of our view, but I would like to hear how companies are planning for this, how you're thinking about this for next year, and launch our second polling question here, which is, does your strategic plan for Brazil assume smooth economic reopening in 2021? And then you have the first option there, no, we expect strict lockdowns in key states. These would be kind of as strict as measures got, for instance, in the second quarter of this year. No, we expect ad hoc social distancing measures among states. And I would say this is more similar to what we experienced in Q3 of this year, where you had a lot of different approaches and measures and restrictiveness of those measures across Brazil states and across local levels. Or the third or fourth options, yes, we expect smooth reopening through 2021, or not sure and still evaluating. Obviously, still a very uncertain situation and a lot of changes happening even within the last few weeks. So we'll give just a few more moments here to make sure we can get all of your answers on the line. Great. So it seems like most are either aligned with our view of expecting ad hoc social distancing measures among states, 41%, or yes, we expect smooth reopening for 2021. And this divide is something that we've seen through many of our recent events with Brazil executives. Definitely something that I think is still highly uncertain as to how we see the situation evolve, and will be very dependent on vaccines as well too, and when we're able to start deploying those in Brazil. But that is likely until we get sufficient immunity that start having a major impact with all the logistics and supply chain issues that still need to be overcome, more of a second half of 2021 story.
Absolutely. So thanks for the COVID-19 update, Ramiro. You definitely highlighted lingering uncertainty and risk with COVID-19 cases once again accelerating. I guess a quick question that I have for you is, how are executives across the region and in Brazil, how can they monitor the situation in particular?
That's a good question. I mean, it's obviously still highly volatile. The two key factors that I think are still very important to continue to track even on a weekly basis. What we update our clients on a weekly basis is the evolution of cases across regions, especially at the local level, and what kind of social distancing measures might be implemented there, the kind of risk tolerance that we're seeing across local governments, but also that ICU healthcare capacity. That is the #1 measure to continue to track to make sure that our healthcare systems do not get overwhelmed, and then you have to go back to more strict measures. And of course, anything on the vaccine development front, we're seeing that move extremely quickly. As of this morning, the approval of Pfizer in the UK, for instance, having some positive news there on that movement. The quicker that we can get some of those things moving, especially the AstraZeneca and Oxford vaccine that has been the priority of the Brazilian government. Any key movements you see there with Anvisa and the approval process moving forward will be very important to dictate this environment as well.
Absolutely. Thank you for providing those two key factors to monitor. And they'll definitely be part of our presentation today, which leads us to our first topic, which is going to be customer demand and the K-shaped recovery that we are seeing play out in Brazil. So, Ramiro, I'd love to hear a little bit more about how you are seeing customer demand evolving across Brazil, both in terms of the industries and the geographies as well.
Sure, we can dig right into that, Marco. So, as you mentioned, that K-shaped recovery analogy is very important, I think, in a moment like this, to be able to really prioritize and segment customers based on what we're seeing, because it's not an even recovery across the board that we expect for 2021, and not even as to what we're seeing right now too. Across these three kind of main tiers, right? We have at the country level, where you can look at Brazil from a regional perspective versus other markets, what we're seeing there, and then also the industry level and across Brazil's regions, as you mentioned too. So I won't go into each one of these blurbs, but I'll add more color on each one of these throughout the presentation. Now starting with the country level. So here, what we can see is what I was mentioning earlier, right? Brazil has done a lot better from the economic perspective than what was expected earlier on, especially looking at some of those answers from the polling that we had, many doing better than they expected this year, or much better in some cases. And a lot of that has to do with the fiscal response that Brazil had to try to support the liquidity of companies and businesses during the pandemic and individuals during the pandemic. And that's what you can see here, right? So for instance, what I'm showing here is the size of the fiscal packages as a percent of GDP across the region. And Brazil here clearly being a leader in the region, implementing a package of about 14.6% of its GDP. And the only one in the region with greater, let's say in total, of that package would be Peru. But the measures implemented in both countries are very different. In Brazil, for instance, you had many direct cash injections into the pockets of individuals through the emergency cash transfer program, and they were far more direct in that sense compared to Peru, where there were many credit-based measures, for instance. And then also you have to look at these fiscal packages relative to how strict social distancing was and those measures that we had and restrictions that we had implemented throughout the year. And Brazil, they were far less strict compared to Peru, which was one of the countries in the world that had one of the most strict lockdowns. So relative to that, Brazil clearly stands out as a clear winner, and we are seeing the benefits of that playing out from the economic standpoint, as you can see here, where Brazil is having a recovery by 2022 of pre-pandemic levels, so index here to 100, where they were at 2019, being the leader of the main markets across the region, others taking longer to recover those pre-pandemic levels of economic activity. And our contraction here is an expectation of negative 5.1% for 2020, a recovery of 3.1% in 2021. So better than what we're seeing in some of those other markets that I mentioned, being trailed by Colombia and Chile, but much better than the kind of contractions that we saw in, for instance, Mexico, Peru, and Argentina, and who did not have the same level of fiscal response, as I mentioned earlier, and more direct fiscal measures like we saw in Brazil being implemented that really helped to support the liquidity of individuals especially. And we're not seeing those kind of double-digit or near double-digit contractions that we're seeing in Peru, Argentina, and Mexico. But to sustain that recovery moving forward in Brazil, there's going to need to be a key inversion of a trend this year. And that factor that I've mentioned that has helped to maintain the economy at a bit of a better level compared to some of those other countries in the region, which is this here, right? On one hand, you had investment tumble in Q2 of this year. And what has been supporting the economy has been the public sector, right? It's with all those stimulus measures being implemented, but this is not sustainable. I mean, we can see how much Brazil's debt to GDP has already increased this year. And it's looking like it's going to end up somewhere close to 95 to 100% of GDP. So that's not something that we can rely on to the same extent in 2021. And what we need is for the private sector to start filling in the void that is being left by the public sector as you start to have some of that stimulus significantly diminish into next year. And what that's going to mean is giving credible signals on the fiscal situation that Brazil's not going to go into a fiscal crisis coming out of this, and that we're going to continue to see reform progression, things to improve the business environment and give more and more confidence to investors that Brazil is moving in the right direction coming out of the pandemic. But we're still not very bullish on that being a very rapid transition for the private sector to fully be able to quickly fill the void being left by the public sector. And that's what you can see here, for instance, in a couple different metrics that I'll show. And this is one that just simply, from a recent survey, asked companies if they were planning on downsizing their labor force once some of those stimulus relief measures for employment started to be phased out into Q1 of next year. And you can see 15% of companies here saying, of the ones that were receiving government support, saying that they plan on downsizing when those end, especially in the key services sector. And this is just, let's say, companies that are planning on downsizing, which does not necessarily mean increasing investment coming out of the pandemic, which is a different thing too, right? So we're seeing many of them coming out of this with a challenging financial position, not necessarily having those investment intentions back to pre-pandemic levels. And that's what we can see here, right? This is an indicator that simply measures investment intentions across different industries. And what you're seeing here is that, yes, they have all rebounded relative to the sharp downfall you had in Q2 of this year, but across the board, you're still below pre-pandemic levels. And the two leaders in this group, the industrial sector and the retail sector in Brazil, have been the two that have been most directly benefited by some of those stimulus measures that I've mentioned throughout, compared to what we're seeing, for instance, in the services and retail sector, they're still behind. And this kind of recovery of stimulus and that main stimulus driver is not necessarily sustainable, as we'll mention throughout the presentation too. So taking that all into account, you can see our expectation for how much investment will fall this year and how long it'll take it to recover. And we don't think that will fully materialize until 2022, which means that the private sector is not going to quickly fill that void that's being left by the public sector, while we have that multi-year recovery that we expect in Brazil. So now what I would like to do is shift gears a little bit to the industry level, and what we're seeing materialize across different industries in Brazil, because we're very much seeing this framework that I'm showing here materialize with the real data that we have. So what you can see is essentially we expect this swoosh-shaped recovery to take place in Brazil from an aggregate macroeconomic standpoint. But when we break it down into different industries, what we expect is to have more of this K-shaped recovery, with some industries recovering pre-pandemic levels quicker, others being more hard hit and laying behind. And this really has a lot to do with how disproportionately some industries have benefited from government stimulus and some shifts in consumer and business demand, compared to others that are seeing sustained losses in income demand and growth coming out of the pandemic. And to give us an idea of where we're starting from, here we can see Brazil's different industries, how much they have contracted relative to their peers across the region in the first half of the year. And obviously a few key trends to point out here. One is that obviously Brazil did do better in sustaining activity across some of its key industries relative to many of the other countries in Latin America. I would say the key exception here where we saw a very sharp contraction, hotels and restaurants and other key services, which I'll highlight. And then there's obviously some outliers too, right? We have some sectors that have actually increased their growth during the pandemic. So for instance, agriculture doing better during this period. That has a lot to do with the external demand and demand from China, especially for agricultural products. The extractive sector, I would say this is a little bit of a statistical effect. It's not actually doing as well as you would expect, because we're comparing to the first half of last year, where you had the Brumadinho accident in Brazil. But across the whole, even though Brazil did do better than many other markets, we're still talking about 5 to 10% contractions, a significant amount of ground to be made up across key industries. And that's what we can see here, right? That this is, we did see record contractions across different areas, but we're not facing the same kind of unprecedented territory across all industries. So to just highlight here, and this is an interesting analysis from FGV in Brazil, which essentially looked at how much industries contracted across different crises. And obviously there have been many in Brazil's recent history, as you can see here in the bottom. And this red dot showing the COVID-19 contraction in the first half of this year. So essentially what I would like to point out here is that when we look at manufacturing, retail, or construction, we aren't that far off from other uncharted, let's say, other levels of contractions that we've seen before, especially in construction, where we did not see the kind of contractions that we've experienced in prior crises, compared to services, right? And services being one of the main pillars of the Brazilian economy, representing more than 60% of GDP. Here, we're very much in uncharted territory. We haven't seen this level of contraction in the past recent crises. Usually the services sector is the one that remains the most resilient. In Brazil, you can see on average here by these gray bars, this contraction being about negative 1.1% during past crises. if we exclude retail really expanding on average during the last crises. But now we're seeing more than, this 10% contraction of the services sector. And as we start to look forward, that's what we see with that K-shaped recovery that I mentioned, right? When we break down this kind of swoosh-shaped recovery that we're seeing materialize in Brazil, there's very different stories as to what we're seeing materialize in the retail and industrial sector versus what we're seeing materialize in services that is seeing more structural damage. And what we also have to ask ourselves is how sustainable is this recovery of retail and industrial production too? Because we know that we're coming off of a period of repressed demand, as you can see here, and then all of this benefit that we had from stimulus being injected at such large amounts in Brazil, leading to that rebound. But how sustainable is that moving forward when we look at the labor market? Still more than 11 million less employed Brazilians compared to prior to the pandemic. So at some point, we'll start to feel more and more of that pain, which is why continuing to use this K-shaped recovery across industries is going to be key. And here you can see kind of our heat map of when we expect different industries to return to pre-pandemic levels of economic activity. And I think there's a few key points to be made here. One is that across the board, there's many industries that are still going to be at pre-pandemic levels throughout 2021. The other main point I would say is that some are already at or above pre-pandemic levels because they saw demand for their products and services increase during the pandemic. And that would be things like retail and fast-moving consumer goods, with a lot more people consuming at home, supermarket sales, all of those things that we saw during the lockdown becoming a lot more prominent. Then you have other sectors like agriculture I mentioned, with that external demand being robust too. IT and telecom here, with a lot of the focus on technology products and digital transformation that many companies have had to rapidly adjust to be able to survive the harshest moments of the pandemic. But then others that will really take a long time and are still going to be suffering quite a bit. So you can see the services sector here. And one final point to mention is that we do see a little bit of a hangover, I would say, for some industries that are doing better now because they're benefiting from all of that that I was mentioning. But as that starts to be phased out and we feel more of the pain of the labor market, that not necessarily being the same situation that we're seeing today, for instance, with durable goods or manufacturing in Brazil. And now finally, I'd like to move to that last pillar that I mentioned at the beginning, which is across regions and the K-shaped recovery across regions. I would say there's three key factors to monitor across Brazil's regions in order to identify the kind of recoveries that we will see materialize. The first one is obviously the one we mentioned at the beginning, right? The COVID-19 situation, what kind of measures are being implemented, how's the ICU and healthcare capacity across different regions, and the COVID-19 situation across regions. The second one's going to be the industry profile that each of Brazil's states have, and that's what you can see a little bit of here on the left, obviously kind of simplified, but looking at which states depend more on agribusiness, for instance, which is more of a resilient sector, as I've mentioned throughout the pandemic, relative to others that depend more on services or the industrial sector that might face a little bit more of headwinds next year, especially if stimulus starts to fade, or whether you have a more diversified economy, which puts you in a little bit of a better standpoint to be able to benefit from some of the different trends that we're seeing across that K-shaped recovery. And lastly, the final point that I mentioned is going to be very important too, is your dependence on stimulus coming out of the pandemic across Brazil's regions, which will also be a very important factor to drive the recovery of demand that we're seeing. And you can see all these factors already at play, looking at economic activity across Brazil's regions, different levels of contraction and recoveries, which we would expect to continue to see, depending on those three main factors that I mentioned. But now to focus a little bit on the last one, which was the dependence on stimulus, what you can see here is how much Brazil's different states have lost in terms of the real wage mass during the first half of the year, and how much they received in just that cash transfer, emergency cash transfer measure that I mentioned across the states. And you can see that on net, marked by these little dots that you can see in either red or green, you've had more, let's say, income levels actually increase in many different states relative to the real wage mass loss because of how much was injected. But at some point, this will start to be phased out, and it's looking like early 2021, where you're going to start to feel a lot more of the pain of the real wage mass that we've actually seen, right? And just to give you an idea, we know that President Bolsonaro has talked about at different points trying to expand some of these cash transfers or expand Bolsa Familia into next year. But Bolsa Familia really cost the government about 2.5 billion reais per month, compared to at the peak of these measures where the government was implementing about 50 billion reais per month in direct cash transfer. So even if you were to double Bolsa Familia, for instance, we're talking about going from 2.5 to 5 billion, still only 10% of what we had before, and where you'll really start to feel more and more of the pain of what we're seeing in the labor market, which is going to be different across regions too. And that's what we can see here. On one hand, what percent of households in Brazil were receiving the emergency cash transfer across states. And clearly here, the North and Northeast, and with lower income levels, having more and more people receiving this cash transfer and depending more on it. And especially in the Northeast, that's been a region that's seen the highest level of job destruction during the pandemic, given higher levels of informality, how those jobs tend to be less stable, which means that they're in for a harder landing coming out of once you start to have the stimulus be phased out, right? Because they have a much more challenging employment situation, and we're more overly reliant on the stimulus compared to what we have in the South, for instance, where you have more formal jobs and less dependence on the stimulus, where you might have a little bit less of a hard landing there. And now what I would like to do is launch one polling question to see how you're all thinking about this on the line, which is this one that you can see here. By which year do you expect total annual sales to return to pre-COVID-19 levels? Obviously, a lot of differences here depending on which industries you're playing in, which geographies you're prioritizing your customer segmentation moving forward. But either already in 2020, 2021, 2022, 2023, 2024, or beyond, the last option there.
That's a really interesting view on the customer demand environment in Brazil. So thank you, Ramiro, especially as we look at the government programs and the regional differences. One question that I have for you as we wait for the answers to come in is, what would be one recommended action for B2C and B2B companies in this environment?
That is a great question, Marco. And I would say for B2C and B2B, key point here, and let's say a key action to take, especially relative to all the content I just presented, is that customer segmentation is going to be key. We're still seeing a lot of volatility in demand across different customer groups, across different regions, across different industries and geographies. So what that means is making sure we have a very high level of customer segmentation going into 2021. But then also there's a few more strategic items that I would say that will be important too. We're a B2C company with kind of the explosion of e-commerce, making sure that we're capitalizing on that trend, adjusting and preparing for that to continue to be an important growth driver for business coming out of the pandemic. And more in the B2B space, I would say a lot of the client conversations that we've had recently have had a lot to do with how sales processes have changed amid the pandemic. B2B sales tend to be very kind of relationship driven with a lot of physical interaction. And now we've had to shift a lot of those things to online. So seeing what are the key benefits from that shift to online, what are the trends that we think will stick, what benefits have our customers gotten from these changes in preferences and kind of customer journey coming out of the pandemic, and how can we capitalize on those to also emerge stronger and kind of promote the transformation of our businesses. With that being said too, I think we have the results coming in from the poll, with the majority also expecting similar to our view here on the entire kind of macroeconomic level when we see Brazil recovering, which is a 2022 recovery.
No, fascinating results both on the polling and your answer to my question. Thank you. Shifting gears, I'd like to ask you about how you see the competitive environment changing, and what are the most important competitive pressures businesses should prepare for?
Great. So I would say there's 4 key important pressures that all businesses should either already be preparing for because they've already been facing these in 2020, or others that might become more prominent in 2021. And there's going to be 4 that we'll focus on in this conversation. One being FX versus inflation dynamics next year, the supply chain bottlenecks that we've seen materialize in Brazil already, the evolution of Chinese foreign investment and competitive pressures coming out of different, let's say, competing groups in Brazil, and then also industry consolidation coming out of the pandemic, how we see that evolving. So to start us off with the first bucket there of FX versus inflation, as all of you know, Brazil has been, and the real has been one of the worst major performing currencies globally as of November 16th, which we have here, losing about 26% of its value relative to where we were at the beginning of the year, much worse than what we've seen materialize in many of the other countries in the region, like Mexico, Colombia, for instance, that we're seeing here. A lot of that has to do with the massive capital outflows that we saw materialize early on in the pandemic. But now we've gotten through the worst of that. We're seeing risk appetite improve a little bit more, starting to have those inflows recover in Brazil, and the real moving a little bit more positively. And you can see our view here that we expect gradual appreciation into 2021, slightly better relative to the pressures that we saw in 2020. So we're talking just about 5.18 on average for 2021 compared to 5.20. I'll say it buys a little bit more to the upside, especially if Brazil and the government's able to give clear signals on the fiscal situation. We saw yesterday, for instance, President Bolsonaro speaking, saying that the government would not expand the emergency cash transfers, That alone led to a big movement as well on the real, in addition to other things from the external standpoint, like positive vaccine development, and getting more positive news from the COVID-19 front globally, that we're starting to move more and more with those vaccines. But all these factors are going to be important, as you see here, to drive and sustain the real. I think we're still going to have volatility because of those fiscal risks that I mentioned until we see clear plans from the government moving forward into the first half of next year as to how these pressures are going to be overcome. But our general view is that they will have to give sufficient credibility on those plans to avoid Brazil from going into a fiscal crisis, especially as President Bolsonaro looks at those 2022 elections, does not want to enter those with a much more challenging economic situation. So we think that will be one of the key drivers, along with some of these other things here, right? Trade continuing to normalize and improve globally, commodity prices continuing to increase, risk appetite towards emerging markets starting to get better. So say in all, our view is here more towards the upside and having a better performance relative to what we did this year, which should help a lot next year for companies too that have suffered a lot on their margins this year, given all of this FX depreciation for a lot of those that are importing and selling in Brazil too. And to that point as well, we still think that price sensitivity is going to remain high in Brazil. And I'm looking at two factors here. One is inflation versus the FX depreciation and appreciation environment. So although you've had different, let's say, categories of products increase and see spikes in their prices even during the pandemic, as a whole, especially when fiscal stimulus starts to fade, we start to feel more of the pain on the labor market. You still have a lot of idleness in Brazil in different sectors. We do think that all those things will help to maintain as a whole prices as somewhat, let's say, controlled with our inflation forecast on average, as you can see here for the following years. And so the price sensitivity is still going to remain a challenge. We're not going to be able to significantly increase our prices next year for many different industries. That is our view, I would say, in general. But the thing that will help companies a lot and start to recover some of the pressures that they had on their margins this year will be the gradual appreciation and recover of some of the lost ground of real that you can see here over the coming years. Not a significant amount into 2021, but as I said, our bias is more towards the upside there, which could be a better situation than what you're seeing here, especially a lot better than this massive pressure that you were feeling in the real, significantly depreciating this year, as you can see here throughout this chart. So moving forward to the next point that I wanted to stress, it was all about the supply chain bottlenecks that we've seen materialize in Brazil, right? And what a lot of this has to do is that companies in Brazil were not able to sufficiently calculate the timing and the strength of the market rebound relative to the expectations that we had before. And that's what you can see here, right? And what I'm showing here essentially is how demand expectations sharply fell early in the pandemic. And as companies prepared for a very dire economic environment, what they did was start slowing production and start decreasing their stocks rather than increasing production. But then all of a sudden, we had the massive increase in demand expectations with all that stimulus and repressed demand coming online while we had stock levels low, right? So then you started having all the problems and bottlenecks, not being able to source all of the inputs that were needed to produce. And that created problems for companies to be able to fully satisfy the demand that they all of a sudden saw surge in Q3 and Q4 especially. And that's what you can see here on the right with a lot of companies in the industrial sector, more than 40%, about 44% here in total, saying that they have not been able to satisfy a large or small part of their demand because of the pressures that they're seeing in some of these supply chain bottlenecks. And the main kind of culprit here and the reason for that has been those lack of inputs and raw materials, especially with stock levels being drawn down for so long, given that there were more pessimistic expectations, which will still create some pressures into the future here, right? And you can see that the expected time until the normalization of supply chain by industrial firms in Brazil is 3 to 6 months, both for domestic inputs, imported inputs, and their own supply. So we're still going to face a little bit of challenges here. And this also kind of begs the question more from a strategic standpoint of different things that we could be doing in order to prevent this from happening in the future, whether it be digitization of our supply chain, how can we get more responsiveness out of our supply chain too, how can we get our distributors to share more information to us from final customer demand, as they're seeing it materialize, localization of production too, which might be one of the trends that we see materialize coming out of the pandemic too. But in all, this is going to continue to be a little bit of a challenge for the next 3 to 6 months until the supply chains fully normalize. And then the other factor here, which is also important and cited often as one of the reasons they've had trouble in satisfying demand, was a lack of labor, right? And this has a lot to do with how volatile demand has been. Many firms reducing their headcount early on, but still not being very bullish on rehiring everyone, even with these pressures that they're seeing and increased demand, because As I mentioned, there could be a little bit of that hangover into next year. They start to have stimulus fade. So not seeing companies rush back to rehiring everyone, many of them still being more hesitant, even with some of these increases in demand for different goods that we've seen coming off of that stimulus and repressed demand during the pandemic. Great, so moving forward, I'd like to go into the next bucket of competitive pressures that I mentioned, which was all about industry consolidation. And here all we're saying is a survey that asks companies in general by the end of August, how has your company been impacted by the COVID-19 pandemic? And they're organized by the number of employees across different firms. And I would like to focus on the more than 500 firms here, so the largest companies that we have. And you can see here you had a bit of a split, right, with about 23.6% saying they had a positive impact during COVID-19 and 23.8% saying they had a negative impact. So we can't rule out that many of these that are in a more strong, better financial situation coming out of the pandemic might not push more and more aggressively towards mergers and acquisitions and try to increase their footprint in Brazil, more inorganic growth coming out of the pandemic. And we know that this happens often during periods of crises, right? So what I'm showing here is those more than 500 firms organized by which one saw the greatest industry consolidation during the last pandemic. So looking here as to what were the percent changes in the number of firms that we had across different industries from 2013 to 2017, so before and after the last crisis that we recently went through in Brazil. You can see here, these are all industries that already saw a lot of consolidation during the last crisis. So they're likely going to see less now because we already had a lot of them materialize during the very recent last crisis that we went through, compared to other industries that have not seen as much consolidation during that last 2015 to 2016 crisis in Brazil, which are some of the ones that I wanted to highlight here. We're likely to see a lot more, let's say, consolidation coming out of this current pandemic. And here, for instance, the retail sector, where in the more than 500 firms, you only had about negative 1.9% of lesser firms coming out in 2017. This is an industry where now you're seeing them have to adapt quickly to a lot of the new trends, especially with e-commerce and growth and digital transformation, where we might see a lot of the retail sector start to be more consolidated coming out of the pandemic, especially if we think of some of that e-commerce growth and how we tend to have key players materialize as e-commerce matures in different markets. If you think of your Amazons of the world, for instance, trying to gain greater and greater market share, that is something that we're likely to see too, especially because Brazil still has a lot of different e-commerce players there and still a fragmented market where you might see more and more consolidation. Similarly with healthcare, where we've already seen a significant amount of consolidation materialize during the pandemic, even in the second half of this year, especially across many vertically integrated players in the healthcare space, moving more and more forward to increase their footprint in Brazil, taking advantage that some of these players have been more impacted during the pandemic, might have a more delicate financial situation. And I would say in general, that industry is a bit more ripe for consolidation, given that we did have an expansion in the number of firms too. We're looking at the more than 500 bucket there in dark blue, compared to where we started the last crisis. That's a movement that we're already seeing a lot of in the market, and something that companies will need to continue to prepare for and compete with, as you might have more and more consolidation materialize across some of these different industries. And finally, the last group that I mentioned was the Chinese foreign investment in Brazil, how that might impact different multinationals coming out of the pandemic. And here, what you can see essentially is the evolution of the capital goods imports, how much was imported from different countries into Brazil, and China gaining a greater and greater share of the pie there over time, representing about 28.4% with the most recent data point that we have, and taking more and more of that share away, especially from the United States and some Western European markets. And then similarly with consumer goods imports as well, right? Significantly increasing over the last couple of decades. And that is competitive pressures that are unlikely to recede coming out of COVID-19. And why is that? Well, on one hand, we know obviously that China is coming out of this with a much more resilient situation compared to what we're seeing in the United States and Western Europe. So on one hand, you could say, well, this gives, let's say, Chinese firms a lot more wood to chop locally, but we know the Chinese government continues to prioritize international growth, and many firms continue to prioritize that, or many Chinese firms continue to prioritize that too. We saw the Belt and Road Initiative, all these things that we know will continue to drive high competitive pressures for Chinese firms in a lot of these markets, especially markets like Brazil, especially because, as I mentioned, they will come out of this with more, let's say, aggressive, potentially more capitalized and financially better situations, given that China is not experiencing the same level of contractions that we're seeing across the United States and Western Europe, and is coming out of this with a much more stronger rebound next year compared to those markets too, given all the stimulus and priorities that the Chinese government has, compared to what we might see out of the United States and Western Europe, where many companies might still be focusing on stabilization of their local markets and not as aggressive coming out of the pandemic for some of these other markets. But now what I'd like to do is, I know that I've just mentioned one competitive pressure here from Chinese firms, but there are many other Western multinationals that might be top of mind of competitive pressure or other local firms. So I would like to launch a poll here asking you all who you see as the greatest competitive threat in Brazil over the next 3 to 5 years. Is it local companies, other Western multinationals, Chinese firms, other Asian firms, or other? And we will give a few more moments here to get these answers in. All right. So we'll go ahead and start wrapping this one up here and sharing the results. So as you can see here, 46% saying Chinese firms. So I'm not very surprised there based on what we've just discussed, but then also other Western multinationals and local companies. And based on a lot of the conversations that I've had with executives in Brazil, local companies do continue to represent a big threat because they can be a bit more agile and given their local footprint compared to some of these other multinationals operating in Brazil. They can still benefit from some of the fiscal exemptions that exist in Brazil for local firms. They can navigate the tax environment easier, benefit from subsidized loans from BNDES, and then they also don't have to face some of those FX pressures that we mentioned and this tariffs as well in Brazil that other multinationals might be mentioning. So local companies, I would say, also stand out, in our opinion, as a key kind of competitive threat to multinationals operating in Brazil. But it's interesting to see this breakdown here.
Yeah, fascinating results as a whole from the question there, Ramiro. And we know that Brazil will remain a highly competitive market across both industries and the international scene as well. But there are key competitive pressures that firms will need to prepare for to ensure profitable growth amid the recovery. Thank you everyone for your questions. I do want to highlight the Q&A box and the chat function. One last time, you can direct any further questions you might have and we will address them at the end or send you an email after this presentation. But now I'd like to focus on the last main pillar of our presentation, which is the operating environment. So Ramiro, what are the key challenges that you see here for Brazil for the next year?
Great, thank you, Marco. Yes, I would love to add a little bit more color there as to what we're seeing in the operating and policy environment. I would say the key factors to monitor here are what we see materialize in terms of reforms coming out of the pandemic. What kind of credibility can the government give on the fiscal situation that Brazil is not going to go into a fiscal crisis coming out of COVID-19? And here there's a few reforms that we think will continue to be prioritized. They're already starting to move in Congress, depending on what the government's priorities continue to be, especially looking forward to those 2022 elections. And I would say there's a few kind of near-term or more medium-term reforms that we need to see coming out of the pandemic, and the more immediate ones are, especially if the government wants to extend the emergency cash transfers further. We saw President Bolsonaro saying that this would not be the plan, that potentially it's going to be more of expanding Bolsa Familia, but still a very fluid situation depending on what the government wants to do there, especially wants to keep some of that popularity boost that it saw earlier in the pandemic with all those cash transfers being pushed to different segments of the population. So there, if that was a priority, you would need to see some of this PEC emergencial, Pacto Federativo, things that would allow you, in order to maintain the public spending ceiling structure in Brazil while still expanding those different kind of new measures by cutting spending in different areas, allowing kind of the triggers within the public spending ceiling to be set off to create the room for that. But we do not see that be the priority. It's more of reshuffling to expand on Bolsa Familia, for instance, and the key things to monitor, which have a lot more medium-term implications and long-term implications I was mentioning in Brazil, which will be still very important on the fiscal side to give credibility that Brazil is moving in the right direction. It's going to be all about the administrative reform, which really just needs to be kicked through the goal at this point, but still has very kind of politically contentious elements, even though it's been watered down a lot. But we do expect to see that in the first half of next year. And then the tax reform proposal, which still remains, in our view, is the most important reform to try to promote growth in Brazil, which down the line can increase revenues, all these things as we have higher growth, just fix the fiscal situation too. But there we continue to expect a watered down reform because if we're looking into next year in the legislative agenda, there's not a lot of time to push a lot of these contentious reforms. We still need to push the budget for next year too. All these things that create a very kind of convoluted agenda, and with many contentious points across many of these different reforms. So we look specifically at the modified tax reform proposal. What we expect to happen is still a reform that focuses largely on simplifying the federal tax system in Brazil, falls short of really including municipalities and states, where there's still a lot of frictions there on how to manage that tax revenue situation with a tax reform. So we still think it's largely going to just focus on creating a new federal VAT, creating a path down the line for further simplification, but unlikely that we don't think we're going to get this as deep and structurally as we would like, with a short legislative agenda next year with many different elements that need to continue to be pushed in the first half of next year. Because really after the first half of next year, then political tensions start to grow a lot more. You start to have the vision towards those 2022 elections. It becomes a lot more difficult to pass robust reforms in Brazil. So that's why we think we will have this watered down reform, but we cannot rule out the downside probability as well with 35% that you might have no tax reform implemented. And we give the upside just 10% here that you would have a more deep and structural reform in Brazil. And then finally, the last point that I wanted to mention here on the operating environments, that we're still going to be operating under a very high level of uncertainty in Brazil, given a lot of these moving pieces, which could make the situation, let's say, a lot worse or a lot better if we're able to pass more deep structural reforms coming out of the pandemic, give credible signals on the fiscal situation that could really improve the environment, or if you have the opposite, right, and you had more populist measures being pursued, especially on the fiscal side, with eyes towards those next elections. And all in all, what we can see here is essentially this economic uncertainty index, which compared to past crises, we can see even though we're much lower in terms of economic uncertainty compared to where we were during the beginning of the pandemic, we're still operating at essentially all-time highs compared to these past crises that we recently faced in Brazil. And as I mentioned, with President Bolsonaro's approval ratings now starting to slip a little bit more as you have that stimulus fade, we cannot rule out that you might have more and more volatility on some of these reform progressions, on different measures that the government prioritizes with those 2022 elections, all things that we need to closely monitor because they can very much impact the operating environment and the economic landscape for 2021. So all that being said, I'd like to shift gears here to our final part.
Great, thank you so much for updating us on Brazil's latest outlook for 2021. I trust that executives on the line will be able to strongly benefit from pressure testing and aligning their strategies for 2021 with many elements of today's presentation. A quick question that I have for you is that I was wondering if there are any clear and final actions to take that you would recommend to executives preparing for the economic landscape you have laid out in 2021.
Sure, that's a great question. I'll end that with a couple final points, and I'll say that we're still very much in a pivotal moment in Brazil for companies to continue to transform and ensure that they can have stronger and more resilient growth coming out of the pandemic. So we're looking at that industry and that heat map that I showed earlier with many different industries taking time to recover. That does not mean that we cannot outperform within our own industries, try to focus on gaining greater market share and accelerate that recovery. But that's going to take making the right transformations today and the right investments today. And there we know that there's many kind of permanent changes coming out of the pandemic, permanent changes to lifestyles, to businesses, to business models, to customer journeys coming out of COVID-19, to how governments interact with citizens, all these things that we know that businesses will continue to have to adapt to and transform to, and make the right investments today that they can then use to accelerate their growth coming out of COVID-19. Obviously, a lot of this has had to do with digital transformation, but there's many different areas too that we can think about. And I would say a key area to think about this, and especially as we're adapting to those permanent changes, is thinking about how our response has been so far and whether it has been more tactical or strategic in different areas, right? Are we being more tactical to kind of adapt and survive the greatest pressures of the moment that we're seeing today? Or are we being more strategic in order to be able to transform our business coming out of the pandemic and ensure that we can outcompete and be more resilient coming out of COVID-19? So just to give a few examples here, if it was in the value proposition area, so far it might have been the tactical response of adapting product and price for higher price sensitivity, but the strategic response might be mapping changes to customer needs during COVID-19 and in the new normal coming out of the pandemic, and considering also new customer expectations on sustainability for product design, all these things that might be important, and on the health aspect too coming out of the pandemic. Maybe it's been on the channels and supply chain front, so we've been enabling remote sales meetings, as I mentioned, especially in the B2B space, with having more of those kind of online sales processes going online. Maybe it's been a push of products and transactions to online channels. But here, more of a strategic response might be influencing the new customer journey by developing an omni-channel strategy in Brazil, localizing our supply chain if appropriate, but also considering some of the ways to compensate for a costlier supply chain that you might face while doing that. And all of these things that will also be important from kind of the channels and supply chain standpoint. Maybe it's on the people side, and so far we've been focused on enabling telework, trying to find ways to keep productivity high. But now, as we go into more of that strategic response, thinking about how the expectations for greater flexibility might be changing from our employees, how we need to reassess the role of the office and employee engagement coming out of the pandemic, what are the permanent changes that we might see there that we might want to adapt in our businesses to make sure that we can come out of this more resiliently, be more attractive for talent too, all these areas that are going to be important too coming out of the pandemic.
Fantastic. And so thank you, Ramiro, for that insight. We'll now open the floor for questions. We already have a couple coming in, but again, you can use the GoToMeeting messenger. It's very simple. Feel free to send any points of clarification or questions there. One that we have recently received on inflation pressure, it's about the inflation pressure in the last couple of months and the fiscal flexibility. There's an expectation to increase the Selic, Brazil's interest rate. And Ramiro, with this increase, the appreciation of the real might be higher than the forecast we showed for 2021. What are your thoughts on that?
I would agree. As I mentioned during the Hal's presentation, I think our bias is a little bit more towards the upside. And so there we're looking at the different pressures that we're seeing materialize with inflation. It is likely that we will see the Selic have to increase, and probably in the second half of next year. I mean, depending on what these things, how quickly they start materializing, becoming more permanent rather than transitory. I'd say a lot of the pressures that we've seen so far have been more transitory, have been driven by some of those supply chain hurdles and bottlenecks that we saw materialize and that I spoke of, or across different groups with kind of the stimulus being implemented, a lot more people consuming and demanding a lot of different food products and changing a bit of their kind of consumption basket. But as you have companies adapt coming out of the pandemic, you start to have the stimulus fade, feel more of the pressure in the labor market, and still a lot of the idleness that you might have in companies in Brazil. There should be a little bit of a buffer there. But if you start to see more of those pressures build, take on more of a permanent hold, and we start to see more and more, let's say, FX pressures be passed to consumers more than we did this year, you might have a bit of a challenging situation there where you might have the central bank tighten interest rates sooner in Brazil than potentially what you would like during the recovery. But as we look at the real there, for instance, you might have a situation where the real also picks up a little bit more of the lost ground as it becomes a little bit more attractive to invest in some of those assets in Brazil compared to some of what we're seeing in the other markets.
Great, thank you. Politically speaking, another question is, do you see Guedes leaving the government?
That's a great question. I think one that we've been facing for a long time now in Brazil. And I don't think so. I mean, we don't see the real benefit for either party of doing this. What we've seen essentially is Guedes' autonomy and ability to really push and be that super minister in Brazil be diminished over time. And at this point, it doesn't seem like there's much benefit to really cut him out fully, as he still kind of remains as the bastion for Wall Street of promoting Brazil's fiscal credibility, still has some power and influence there, which would just drive some market volatility if all of a sudden he was removed from the government, where at the same time he's not necessarily creating a lot of those pressures for the Bolsonaro administration, since he has had a lot of his autonomy be diminished right now. And from the Guedes perspective, I mean, he has not gotten any of the victories that he's really wanted to achieve during his time at the economy ministry, right? We know that he came in with very ambitious plans of promoting a more liberal, economically liberal agenda in Brazil, liberal in the Brazilian sense. And that has not been, he's not been able to do that, right? We had the essentially pension reform being passed, but Rodrigo Maia took most of the credit for that already, pushing a lot of that reform moving forward. And Paulo Guedes has not been able to have a lot of the victories. We know that this has kind of been his lifelong dream to join the ministry and push a lot of this transformation in Brazil, has not been able to do much of that. So from his own perspective, we don't think he will leave. He'll still try to push as much as he can before the next elections. And depending what happens with those elections, we'll see if thereafter. But I think that the pressures for him to go now, given that a lot of his autonomy have been reduced from President Bolsonaro's administration, and that he still has a lot of, let's say, ambitions left that he's not been able to conquer, we think that he will probably stay in the government.
Since you mentioned the election, we can stay on that topic really. What are your thoughts on 2022 and how President Bolsonaro will perform?
That's a great and very difficult question to answer. So I'll say we have to see how President Bolsonaro's approval ratings continue to evolve coming out of the pandemic. What happens with the economic situation, especially? Are they able to continue to promote a gradual recovery leading to that election, which I think would be a positive sign for President Bolsonaro? Obviously, a lot of his allies underperformed during recent municipal elections, but the municipal landscape is very different to the national landscape, right? Those kind of elections tend to be driven by a lot of local issues rather than national narrative. And it'll all depend on what kind of oppositions we see come together in those 2022 elections. We know the left in Brazil is still very divided. You had a kind of positive performance by Guilherme Boulos in the recent elections in Sao Paulo, and he's been talked about more of someone that could unify more of the left in Brazil, and you see what happens with that movement because the PT still remains very fragmented and weak. And then also what happens kind of with the Centrão in Brazil, what kind of candidates can they put forward? So we're looking at Rodrigo Maia's group, all of these that we know in the Dems, PSDB, that might come together in Brazil with a candidacy. How strong that one is against President Bolsonaro. I would say President Bolsonaro still has a very viable path towards those 2022 elections. It's really going to depend on what we see evolving in the election landscape and what we see evolving with that opposition. Can they come together and form different coalitions, both on the left and in the center, that can make a strong let's say opposition to President Bolsonaro, but I think it would likely be a second round runoff Bolsonaro versus one of those two groups. And then depending on how strong those coalitions are, we might see someone that could potentially unseat the president.
Fantastic. And so the final question that I have for you is regarding international relations with the US. We know that President Bolsonaro has not acknowledged or congratulated President-elect Biden. So my question for you is, how do you see the relationship changing between the US and Brazil under a new administration?
That is also a great question. I would say these things are going to have to remain pragmatic, right? One thing is going to be rhetoric, the other one's going to be actual action and relations. We're still talking about the United States relationship with the largest economy in Latin America. So on one hand, you cannot have the Biden administration necessarily pushing too much, and they're going to have to be more strategic in what areas they decide to push, right? Because if you had a strong economic pressure and strong, let's say, contention between both countries, that could create an inwards, for instance, for China to start improving more and more of their influence in Brazil, which is not something that the Biden administration is going to want to have. But the Biden administration remains very focused on climate change, and we know that many of the recent people that they've named into high-level positions also have that strong view within the Biden administration, which means that you might see more of that strategic style of influence of trying to push Brazil more and more on the deforestation issues, for instance, in the Brazil and the wildfires, which might mean more targeted measures against certain sectors that are more, let's say, intertwined with the Amazon and problems that we're seeing there. So it might be towards agribusiness and those, if they cannot come out to more pragmatic solutions, I would say, that do not involve more economic pressures or those kind of measures that you might see more targeted to different industries that might be more related in that sense. But as a whole, I still think the relationships will remain quite solid. It might just be a few points of contention and conflict there that we might see materialize across the different areas, especially on the climate change front a lot more with now a Biden administration. And that's to say that it's not like we had the best relationships before, right? I think a lot of people like to focus on how similar a lot of the Bolsonaro and Trump platforms were, but we still had a point in time where President Trump was, putting or threatening Brazil with tariffs on their steel industry, all these things that were still quite volatile. You might not have as much volatility anymore coming out of with the new administration compared to what we had before, but still some key risks there, I think, to monitor, especially given the climate change priorities that the Biden administration will have, which could lead to some economic repercussions.
Thank you for that answer and for those insights. Unfortunately, we're coming up on the hour, so Ramiro, I'd like to pass the final word to you for any final remarks before we conclude.
No, thank you so much, Marco, and thank you for guiding this conversation. I hope it's been very insightful for everyone on the line. As just final remarks, I think there's still a lot of opportunities in Brazil, and that's what we've tried to focus throughout this conversation, especially with that K-shaped recovery analogy that I think is very, very useful to think about, is like to segment customers and prioritize different areas for growth in Brazil. As we think about the transformations that we can make to our business to adapt to those changes, to adapt to those recoveries, to adapt to what we're seeing permanently change coming out of COVID-19, I think there's still a lot of opportunities for businesses and multinationals as well to come out of this stronger and more resilient than when we entered it.
Perfect. Thank you so much, Ramiro, one more time. And thank you everyone who joined us today. As a reminder, if there are any questions that we were unable to answer on the line today, we'll follow up with responses via email through your relationship manager within the next 24 hours. It's been a pleasure to have you all. Thank you again for joining us. We look forward to speaking with you soon again. Stay well, stay safe, and happy holidays in the next couple of weeks.
Thank you all. Take care.